Hey traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for January 23rd, 2022. For those of you that don't know, I've been a little under the weather this week, so I'm going to be passing this week's video off to Grega Horvat, who does the Elliott wave analysis on the ForexAnalytix application and platform. But before I do that, I'm actually going to tell you a couple of things. First of all, I'm going to talk about the pricing special that we have at the beginning of the year, every year, that's going on right now. And then after that, I'm going to talk a little bit about the crypto market. Then I'm going to pass it on to Grega Horvat. The reason why, well, you'll see here in just a moment. But let me first mention that if you haven't had an opportunity to take advantage of the pricing that we have available, it is only available throughout the end of this weekend on January 24th. I believe that's actually a Monday. But take advantage of the offer because it is our special pricing that we only do once a year. So it is buy 1 month, get 1 month free, or you can buy 6 months for the price of 4, or you can do the annual subscription or buy 12 months for the price of 7. People wait all year long for this special pricing that we do at the beginning of the year. So take advantage of it because when it's gone, it's going to be gone. And you want to make sure that you take advantage of it now because then you don't have to wait another, 6 months or whatever it is till we offer another special on prices. And for those of you that have been around for a while, you know that's how it works. But let me also mention that download the mobile app because you get that with our application, and make sure you join our community. We have like one of the most dynamic intraday trading communities available. Take a look at all the features that we do have in the ForexAnalytix app itself. Go to the chat room that's right here next to your icon in the upper right hand corner of the screen. All right, so I'll see you guys in the chat rooms next week. Now, before I turn you over to Grega Horvat, let me talk just a little bit about Bitcoin and the crypto market. And the reason why I look at Bitcoin is obviously because it's the grandmother of the crypto market, and it's really all about the sentiment of the crypto market and really risk sentiment in general. But the one thing that I want to point out is Bitcoin has had a nasty fall from grace. And that means the rest of the crypto market is really suffering as well. And we're probably not going to see any stability there until we start to see some stability in either Bitcoin or Ethereum or some of the other bigger name crypto instruments. But the one thing I want to point out is Bitcoin is still, let's talk percentages really quick. We're at fresh new, trend lows here as I'm filming this. But we're a good 17% from the 618 retracement, which comes in around 28,000, 29,000 in Bitcoin. Now, if you look at technicals and you go, well, the RSI is very oversold. If you've been in the markets long enough, you've been looking at, oversold conditions, no matter what analysis you're applying, whether it's a RSI or you're using oscillators or some other technical indicator. One thing that I'll tell you, if somebody hasn't told you already, if it's oversold, it can become more oversold. And if you really look back to 2018, relative strength got to a very, very nasty low level, sub 10, and we are currently, right now trading in the in the teens, in the high teens at that. So if you don't think that relative strength could get more oversold, or we could be more oversold, we can. And the fact of the matter is this 618 retracement comes in around the 28,000 level. And if you think about it, there's a gap between that 28,000 and the 20,000. That's just basically, it's an open door, kind of like a elevator shaft, if you will, that could take place if we break through 29,000. So, you guys that are trading cryptos, it doesn't matter what instrument you're trading, it really doesn't. Whatever coin that you decide to trade, just remember, if Bitcoin really starts to slide through those levels, you're going to see increased pressure probably across the board. And that's something that you should be aware of. So I'm glad you stayed through that and you got to hear what I had to say about Bitcoin. I think it is very important. We do analyze Bitcoin as one of our instruments for many years, Bitcoin and Ethereum in the ForexAnalytix platform. But I'm going to pass it over to Grega Horvat. He needs no real introduction, but I'll tell you what, he has a great Elliott Wave perspective on all markets, and he does provide the Elliott Wave analysis inside the ForexAnalytix app. So I'm going to turn it over to Grega. You guys have a great remainder of your weekend. I'll see you on Monday.
Hello terrestrial everyone, my name is Grega Horvat and welcome to ForexAnalytix week ahead video analysis. Blake is away at the moment, so I will make a first video for you for this year. So as you know, the markets are very volatile. Okay, we have seen some sharp sell-off last week, and it seems that stock market could continue in the risk of direction in upcoming week as well. So before we may potentially approach some of the very important support on the S&P 500, I obviously always want to look at the sentiment, especially into put call ratios. So what we are looking at here is that we're actually seeing here at the bottom, I have put call ratio, and obviously here at the top is the S&P 500, and here in the middle I have this moving average. It's five period from the put call ratio. So it's just to avoid some of the noise and to get the better, clearer picture where currently puts or calls are trading. And if you look back, we have seen some very nice extreme readings here in the past where or when, I should rather say when, stock market has bottomed. So right now we are seeing that investors are buying puts because they are afraid, obviously, that stock market is headed much lower, so they are hedging their stocks portfolio. And what we are seeing here is that there is still room for these puts to reach the previous extreme readings. In other words, there is room for more weakness, and when we are going to see again some extreme values in these puts, that's when actually the opposite may occur, because as you know, market moves in sentiment, and usually this sentiment will changes when we are reaching some of the extremes. So based on these readings, I think that there is room for more weakness here on stocks. We just have to be aware that deeper price action could take place before market may stabilize. Okay, also what is important to look for me is looking at emerging markets. Now here I have the wave count on emerging markets, and notice that after this very sharp move to the upside, emerging markets already saw top in February of 2021, and you can see that market has seen a very nice pullback. It looks like an overlapping correction, but even this weak sector still has a room for further weakness to complete this wave C. So maybe now, when fear is also spreading into the US markets, well, now maybe all of the markets will see a little bit of more weakness, meaning that we are not in a risk on period, but rather still in a risk off period that may not end just yet. Okay, so now let's take a look also on the US yields. This is obviously also very important market to track. Now recently, or not recently, but for the last two years, especially for the last few months, we have seen yields moving to the upside based on speculations that Fed will hike this year. Maybe this will not be the case already now. I think when we have meeting next week, but maybe March in April. I just think that currently they will not do it because there's just too much risk involved. You have these stocks coming already now to the downside based on these Russia and US tensions, and I think that if they will do it and surprise the markets, obviously this would most likely cause an acceleration even lower on stocks. So I'm sure that that they don't want to do this. So here, when looking at the wave structure, well, notice that US dollar is also here. US dollar index is at the bottom, is also recovering since this market US yields are moving to the upside. What we are seeing here is the break out of this triangle here in a wave 4. So important upward projection, in my opinion, is around 2%, and that's when actually US dollar index could also potentially start slowing down, maybe around 61.8%. Okay, so for now, I think that US dollar has room for more upside. US yields also could be targeting this 2%, and at the same time, as you know, stocks are coming to the downside side, so this makes sense why US dollar could stay supported, because obviously in such periods and environment, investors will look for safety in cash. Okay, now let's take a look on some of the wave counts here. Firstly, let's take a look on dollar index. As I said, dollar index, I think it's trapped in a higher degree triangle, and currently we are now tracking wave D that could move towards the 61.8% of wave B, measured from end of a wave C. So technically speaking, there is some room left for further upside here for a wave D. After all, based on basic technical analysis, market recently stopped at this lower trendline support. Okay, so clearly this channel remains in play, meaning that these upper targets around 98 are still valid. In fact, we have seen here on the 4-hour time frame chart very nice free wave decline. Okay, notice that this was wave A, you have a triangle for a wave B, and then a sharp drop for a wave C, where the price stopped at the lower side of this channel, and this is what I call is a corrective channel. Okay, so always when market tries to stabilize after free wave move at the lower parallel trend line, and then you see a response, a very sharp one, away from that zone, this is usually important evidence to say that this whole drop, whole structure was corrective, meaning only temporary within uptrend. So I would be looking for more upside, especially as I said, if stocks will trigger more weakness. And then I think that this dollar index could break this upper trend line, and then obviously I would be looking for a push to new highs here. Now let's take a look also on the euro dollar. So obviously if US dollar index is headed higher, euro dollar could be headed lower. It should be. So what we are looking here is still ongoing big downtrend on a monthly scale. As I said, I'm looking for triangle. It's a sideways pattern, so not really interesting price action. Okay, especially not on a longer term scale, because we are missing few subwaves here to complete this triangle. But for now, when looking here at daily chart, we could see some more weakness to complete current wave C that I'm tracking. Okay, wave C is motive wave, meaning it should be made by 5 subwaves, and the recent bounce represent this wave 4. Same thing like did it on dollar index, so maybe 61.8% will be retested. Here was also this swing zone from 2020. So I'm looking for more weakness here. Looking at the 4-hour chart, very nice 5 waves down here, and we recently slowed down at this trendline support, so I believe only temporary rise and further weakness may show up here. Also, you have these central banks divergence. As you know, ECB is not that hawkish compared to Fed, so I think that this is what will keep this pair for now on the bearish side. Now let's take a look also on cable. Now cable has a different story. I mean, it's obviously Bank of England is much more hawkish than ECB. Also, you have this government in UK removed all. They said that they will remove all of the restrictions for COVID. So this is definitely something that will keep pound supported. And looking from a technical perspective, I think we have a very nice and clear picture here. Now this drop recently was clearly made by free waves. So in Elliott wave terms, always when you have the previous strong uptrend, but then the opposite reaction is only by free waves, well, that is a corrective structure. And this correction, in my opinion, is already completed because we have seen this sharp rise. Okay, so what is going on now? Well, I think that currently we are just facing a correction here. Of course, correction could be much deeper, maybe even back towards 1.34 level before this market could stabilize. So I think that this pound will now stay consolidating here if euro or dollar just in general will stay strong here. Now here I'm looking on the 4-hour chart, only the first leg down, then we have seen a wave B rally. So I'm now looking for a wave C drop that could continue towards, as I said, maybe even 1.34 level when stocks are in risk off mode and when we are seeing US dollar keep trading higher. So when this sentiment regarding dollar will again maybe slow down or change, that's when cable could again be very interesting. So if we see a retest of 1.34 level and then suddenly a bounce on US here on cable and US dollar comes back to the downside across the board, I think that cable could be very interesting here to catch more upside. Now let's take a look also on Aussie dollar. Now, Aussie dollar, firstly, again, as always, I want to review and bring attention to this monthly chart. I'm looking for this historical price action and personality on this pair after we have bottomed during the recession. So here was a 2000 recession, dot-com bubble. Notice that market recovered in three legs. So try to forget the Elliott wave for a moment, but just look this from a technical basic perspective, or how the price action actually reacts away from that level. So we have seen a three wave recovery after a great recession, another three wave recovery, and after this 2020 recession, COVID, of course, so far we have only one leg of recovery. So in my opinion, there is room for more upside. But firstly, we have to identify that this current pullback that we are observing and tracking from February of last year is coming to an end. Now looking at the daily charts, that's still not the case. I'm tracking two wave counts. Okay, the first wave count is that we are now probably in a wave B here and we'll see more weakness, or maybe we are going to see this correction completed from last year highs, like in 7 swings, ABC x ABC. So this is also a counter-trend movement, but maybe it can be much deeper. But after all, I think that this pair, based on both wave counts, could stabilize still later this year and then turn up for a new major recovery. But for now, stocks are trading to the downside. So I think that Aussie will be under pressure. There are very strong resistance levels. In fact, looking at this recent rise, it could be a correction, maybe already finished, and you have now wave 1 here. You have a wave 2 rise, and notice that this upcoming drop could be a very sharp one, especially if maybe stocks will gap to the downside, and then you see extensions even lower. Okay, so this is clearly a counter-trend movement, so be aware of more weakness on Aussie. Now let's take a look also on dollar CAD. Now dollar CAD, we have again CAD meeting. Speculators are hawkish after this. I think it was a 30-year high on CPI. So I think that this CAD could have much more attention, especially if we will have higher rates here. So from an Elliott wave perspective, I think that market recovered in 3 waves, and if we see this broken trendline support next week, just be aware of further weakness here. Of course, it really depends how US dollar will trade in general, but this dollar cat has been very strong recently, probably due to higher crude oil prices. And if crude oil will continue to rise, I think the dollar cat will stop at the resistance. So obviously it really depends what Bank of Canada will do. Also, since I mentioned crude oil, let's take a look here at crude oil. Now, longer term, crude oil is very bullish, but I still think that at some point we will see a pullback. We are tracking two wave counts. Now, first wave count here on the left shows that this was a completed 5-wave movement right here, and you are now dealing with a flat correction. Here on the right, I have still ongoing impulse, but notice that in either case, I think that there can be limited upside, possibly around $90 per barrel. So looking at this two wave counts, just be aware that we could be potentially slowing down, maybe not just yet, because on the 4-hour chart there's still room for more upside, even if that's a wave B rally. Okay, you still need 3 waves structure, 3 wave rise to be completed. Again, I'm tracking either wave C or wave 3, so in both cases I'm expecting a 5-wave movement away from $66. So the first support that we should pay attention is around 80 and $81 per barrel. That's the area we should look for. So obviously, why the crude oil is higher? Well, we have this Russia-US tensions, and then you have this, despite higher COVID cases, governments didn't put out any new restrictions. So of course, demand is still increasing, but we will see what will market do around February. I think that the US and China are ready to release oil reserves around Lunar New Year, so of course this could potentially limit the upside here on crude oil. We will see how this will play out, but technically, of course, crude oil is still in an uptrend. Just be aware of this pullback here on the 4-hour time frame towards 80-81 levels. Now let's take a look also on dollar Mexican peso. Now this one is also very interesting. I mean, you have these stocks coming to the downside, and this one is still remains in downtrend. So Mexican peso obviously is very strong. You have crude oil prices, which in my opinion could continue, as I said, after a pullback even higher. So this is what could keep this dollar Mexican peso in downtrend. And now imagine if maybe stocks will bottom in the next few weeks. I think that this one could see more weakness. Now, looking at this price action from an Elliott wave perspective, I think we reached a top here, and now we are making a minimum 3-wave drop. Last year, we have seen very nice reversal. Here was in November, I believe. Very nice reversal from the resistance levels here. If I look back a little bit here, this was around 22, was high back in 2017. Okay, then we have seen a break back below this level, and again retested it again from the other side. This was also a resistance not only back from 2017, but also it was the end of this 4th wave here. So it was a perfect resistance area. After all, a bounce from recent lows here was very slow overlapping, very corrective. Okay, so I'm looking for WXY correction because of a free substructure here in the first part and the last part here. So more importantly, a drop right now is looking very impulsive, so I think that there can be more weakness coming, possibly after this consolidation period, which certainly could be the case if stocks will continue to move lower. Now, looking at the 4-hour chart, you have this 5 waves down, so broken channel here above this waves 2, wave 3, wave 4 highs. Trend line. I think that this could trigger a little bit of more upside, or at least sideways price action. Okay, now finally let's take a look on the S&P 500. Now the S&P 500 is coming sharply to the downside. I have been looking for 2 wave counts in December, and I said that after this positions, portfolio adjustments, I think that we could face limited upside. Either I was looking for a wave B rally here that belongs to this wave 4, or maybe even a very aggressive wave count ending diagonal. Okay, so this one is something that we have to consider because it can produce much more weakness here. Ending diagonals are very slow, very choppy, and will usually occur at the late stages or at the end of a higher degree cycles. Okay, so I'm looking for this to be end of a wave 3 here, meaning that this, if really that's the case, we could see a fourth wave coming all the way back to this level, but possibly it will retest this wave 2 swing lows here at 40-70. So that's definitely a very strong support at 40-70, because I'm looking at this level on the first wave count where I'm looking here at the flat correction. But as I said, for now, I think based on this put ratio, as I showed you earlier, I think that there is room for more weakness to become even more, for market to become even more bearish before we may finally be looking for some support. So when it comes to flat correction, what is very important, you have 3 waves down for a wave A. Okay, so that's your first leg here. Then you have a 3 wave rise for a wave B, and then you need 5 subwaves for a wave 4. So obviously in the next few weeks, I will be tracking this substructure to see when we have these 5 waves down, because that's when market could be interesting for a rally, even if just short term. So here I'm looking at the 4-hour chart. Okay, you have this wave A, you have a wave B, and now I'm looking at these 5 waves down that are still in the middle of its development. Okay, so recent drop here, notice that it's still a very extended lag here. Okay, so typically this represents the extended lag within a 5 wave cycle. Normally that's a wave 3, so that's why I'm looking for wave 3 of 3 to be still in progress. So just be aware of more potential weakness, as I said, towards 40-70. The resistance levels that we should pay attention on is around 4500 up to 4530. Okay, now I would immediately turn back to bullish side, at least for a 3 wave recovery. If we jump above 4580, then I think that this market could either stay sideways or even straight back to the bullish side. Okay, but for now this market is still in bearish mode, so just be aware of more weakness as long we are, as I said, below these resistance levels. And now let's take a look also on German DAX. Now German DAX is bullish here, still on a monthly scale, and looks like that there can be more upside. We came out or above this upper trend line, parallel trend line, so this 5th wave could be extended, very sharp one, but still it should be made by 5 subwaves. So looking at this daily charts, I have 2 wave counts. At the moment I'm just not sure which one is going to be correct, but I think there are still very bullish wave counts. The first one shows interpretation of a deeper wave 4 in 3 waves, meaning that we could retest even this 14,900. That's a very strong support when you're looking here at the price action from 2021. So this would be ideal support for new bounce, but let's assume that maybe market could stabilize at this lower trendline support. Then also running triangle is also a very valid scenario. So even this one suggests that this is a corrective phase that belongs to ongoing uptrend. So based on both interpretations, I think that DAX at some point will find the support and that the bull market is not done yet. Okay, now finally let's take a look on Bitcoin very quickly. As you know, cryptos have seen a very strong move to the downside, and I have been repeating this in the past, that when stocks are in risk-off mode, and if investors will pull their money out of stocks, well, they will probably do the same with cryptos, because they are very volatile and much more riskier. So I cannot imagine someone to leave the risk on the table in cryptos while they are going out of stocks. Okay, so obviously the S&P 500 after a top, we have seen just acceleration to the downside on cryptos, which already topped here in November. Okay, so as long as the stocks are in this 4th wave, are maybe showing room for more weakness. I think that these cryptocurrencies will also stay in bearish mode. We could even see a retest here on Bitcoin for 30,000 or 28,000. It was a swing low here from last year, and this could happen as a flat formation for a wave 4, which has been my primary wave count for a while. And if the support would hold, then this could also be a triangle here in a wave 4. Okay, overall I think that 30,000, if we see it retested, could be very interesting levels for a new potential turn in cycle. Okay, traders, thank you very much. I hope that you enjoyed this video. Now, if you are looking at the ForexAnalytix platform, well, keep in mind that we still have this new year offer valid, so make sure to hurry up if you want to take advantage of the discounts. Okay, traders, thank you very much for your attention and talk to you soon. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.